Hi everybody, it's Jamie Vasey here, the Mortgage Jedi. And today I want to talk about 3 common misconceptions when it comes to renewing or refinancing your mortgage. Now, for those of you who are in the process of getting your initial mortgage, I did a separate video on the 4 misconceptions that cause you frustration, time delays, and cost you money. So please check that out on my video page. But now let's talk about the ones that will cost money and cause frustration for those of you renewing or refinancing. The biggest one I hear all the time is that people assume their current lender or bank is going to offer them the best solution simply because they have an existing relationship or other products with them. This isn't necessarily the case. We see examples of it all the time, whether it's cell phone providers, internet providers, gyms. They offer better deals to new customers than their existing ones. Well, financial institutions can often work the same way. They have more of a focus on earning new business. So why is that? Well, that leads us to our second misconception. Oftentimes, people assume the way things worked when they got their initial mortgage is how it's going to work now, and that also isn't necessarily the case. For many of you, you didn't have to qualify against a benchmark rate when you first got your mortgage, but if you move from one lender to another, you do. If you stay with your existing lender, you don't. And so lenders are counting on this. They're counting on the fact that you might not qualify against that benchmark rate, and so they're not necessarily going to offer you the best possible option. They assume you may have to stay with them or that you're not going to do your due diligence to find out there's a better deal out there. And that's where partnering with a Mortgage Jedi comes in. With access to over 35 different lenders, I can provide you with other options, many of which may be better. So let's talk about the third common misconception. And that's assuming that you're going to be able to get the low advertised rates that you see out there. That also isn't necessarily the case. Why? Well, because when you're renewing or refinancing your mortgage, you're often dealing with what's called an uninsured mortgage. You're no longer paying insurance premiums, which means the lender is taking on the entire risk. And they often mitigate that risk by charging a slightly higher interest rate. However, when you partner with a Mortgage Jedi, you quickly learn there's another option out there for you. You may be able to qualify for what's called an insurable mortgage. This is where the lender bulk insures your mortgage with other mortgages. They don't charge you the insurance premiums, but because they have that peace of mind, they can offer you a lower rate. So there might be better options than just what your existing lender is offering you. If you want to find out more about this, please contact me at the information below because I'd love to have a conversation about this, even if it's just to see if your lender's giving you the best option. I have no qualms about looking at what you're being offered and saying, yeah, you know what? That is the best deal. Go with that. And if it's not, I'm certainly going to let you know. I look forward to hearing from you. Thanks, and have a great day.